All right, welcome back. It's about 4:30 on this Thursday afternoon. Google coming out after the closing bell. Sales is the number people are really closely focusing on, and that is driving the company lower in the after-hours trade. Let's head to Courtney Donahoe with the latest breakdown on Google.
Well, first I want to, again, recap the earnings per share. EPS X items coming in at 536. Analysts surveyed by Bloomberg, they were expecting 508. So that's coming in ahead of estimates. But revenue, that's a number that a lot of analysts, a lot of investors are really caring about right now. Reporting slower second quarter sales growth. The recession eating away into online ad spending, and that's the main source of revenue for Google. You'll see in the after hours, Google down to about 2.5%. Now, excluding revenue passed on to partner sites, sales came in at $4.07 billion. Estimates were for 4.06, but it was essentially the same as what we saw last quarter. The companies, they've been cutting costs. They've been trimming perks. The companies have been very careful lately about spending. You know, I heard that they stopped providing bottled water and shut down some of the free cafes. They also cut into some research and marketing projects. But paid clicks, quickly, one thing I want to focus on, clicks related to ad sites down 2% sequentially. Carol?
All right, got it, Court. Thanks so much. Some headlines crossing the Bloomberg terminal. This has to do with the balance sheet of the Federal Reserve. The Fed's balance sheet assets rise $80.2 billion to $2.07 trillion in the latest week. In terms of mortgage-backed assets, specifically, rise $64 billion to $526.4 billion. As you know, the Fed has been very involved in terms of buying up various assets and securities. So we're getting the latest reading when it comes to the Fed's balance sheet. Let's get back to Google. Certainly one of our big stories here after the close. Google's second quarter earnings. David Garrity at GVA Research joining us on the phone. So, David, your initial thoughts here on those numbers from Google?
Yeah, initial reaction is that people aren't going to be very excited because the revenue is essentially in line with expectations. And, you know, people are still looking at sort of the dynamics here in terms of, you know, what's going on in terms of paid clicks, what's going on in terms of cost per click. Personally, cost per click was down 13% year over year. Down in the first quarter, it had been down 14%. And we're actually looking at an improvement in terms of keyword pricing up, 5% in the second quarter versus the first, which, people should be encouraged about. I think the other thing that people should focus on here is that, while domestically things, might be weak. Google had 53% of the revenues coming from outside the U.S. as opposed to 52% in the first quarter. So this is a company that's still very much of a global growth story, and you're starting to see maybe some very early signs of positive leverage coming as we start to see improvements sequentially in keyword pricing, something which we think is going to open up in the second half of the year.
David, I'm getting a message from our Adam Johnson. He was talking about Google earlier this week. He was talking to various investors, and he's pointing out that the revenues are up only 2.9% year over year. That's less than the 5% estimate. So he's pointing out is what a lot of investors have been saying. There's no real top-line growth here when it comes to Google. There's no momentum, no interest, and that's why you've seen some people getting more cautious on the stock, although overwhelmingly, as you know, the analyst community loves this stock. But what do you make about that top-line growth that we're not really seeing it here? And it's been coming down, as you know, over many quarters.
Right, and that's where it comes back to the point talking about what's going to be going on in terms of the dynamics for keyword pricing as we start to get into a second half of the year where you have the holiday season, where you're starting to see search ad budgets start to open up. Obviously, this leads open to a situation where you are going to see a pricing in terms of an improvement in terms of keyword pricing. That's going to give the leverage. That's going to give you the acceleration in terms of the revenue growth. If people are selling out now, they're doing it as the train's leaving the station. So, fine. People can do what they want to do with their money, but you've got an opportunity here with Google. The other thing to bear in mind, though, there is a risk for Google in that you are starting to see that, display advertising is starting to become more effective. You've got behavioral targeting. It's less expensive than search advertising. And you've got companies like Skechers that's coming out and saying that, they work with behavioral targeting networks like InterClick, ticker ICLK, that are getting them a return on ad spend of almost 700%. It starts to get to be hard to compete with that.
Right. That's a great point. I know you were kind enough to kind of send us that story about Skechers. I mean, we've got to really kind of watch those advertising trends here.
Very much so. And to the extent that, retailers are trying to do the best thing that they can to find the consumers that are out there, they have to think about the formats that are most effective, and behaviorally targeted display advertising right now with companies like InterClick seems to be kind of a way to go.
Hi, David. It's Courtney Donahoe here. I want to go back to paid clicks. You talked about that a little bit in your first question. Google's paid clicks down 2% sequentially. Cost per click up 5% sequentially. So clicks went down, but the cost went up. We need to go into this a little bit more. What do you think about that?
Right. In terms of the cost per click, you're actually looking at that's keyword pricing. So from that standpoint, that's where we start to see the improvement, and that's what we're thinking is going to be a trend where Nouriel Roubini comes back and says it's not necessarily yellow weeds. Then maybe we're going to start seeing some green shoots here. Nouriel Roubini comes out and says this. We start to say this starts to mean things like keywords start to get better priced. We're going into a better half of the year, and from that standpoint, we think that Google's got better times in front of it, not necessarily worse.
Hey, David, Google also, a headline that came out, sees making significant capital expenditures. Courtney pointed out earlier that this is a company that's been really working on getting their costs in line. Does that worry you, or is that what Google needs to be doing, making those capital expenditures?
I said if there's anybody that has to be worried about Google spending money, it's got to be companies like Microsoft and Yahoo.
All right. Good point. Hey, David, thanks so much for breaking it down. We appreciate it.
Take care. Thank you.
David Garrity, principal over at GVA Research.